Well, good morning, good morning, good morning. It's almost 9 o'clock in the morning here, Eastern time, and what I'd like to do today is just do a real quick video. I want to talk a little bit about why markets are not crashing. As we all know, the market has been moving up, and this is true for not just the S&P 500 or Nasdaq, even the Russell 2000 has been doing pretty well here recently. But also, Bitcoin, Ethereum, all of those speculative assets, including gold, which was trading very, very high prices just here recently. So I want to talk a little bit about all of that. But before I get into all of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and just giving my opinion on the market, my opinion on lots of things in general. The other thing I do want to point out is if you need access to our Discord server where we do a lot of trading and all of that, you can find all of the information on BitDoctor.org, including getting access to the indicator that I use in all of the trading that I do, which is the Wavemaster. You need access to that. Also, you can find that information on BitDoctor.org. Okay, so let's just talk really quickly here for a moment. Why are the markets not crashing? And I believe that a lot of this has to do a lot with currency devaluation. I think it's important for a lot of people to understand what currency devaluation actually is. I'm going to pull up a GE chart here while we talk about understanding what currency devaluation is. And it happens when currency, we'll call it the U.S. dollar, which is currently the market leader. It's the reserve currency of the globe currently, which I do expect within the next maybe 10 to 20 years. This is likely going to shift. Probably China is going to be the country that's going to be sort of taking over. Just because of all of the decisions that are being made from a fiscal policy standpoint here in the United States. But when a country's currency loses value relative to other countries' currencies, that means that it's going to take more of the devalued currency to buy the same amount of goods or services. So if you have a rock and that rock is worth $1, but then whoever controls that dollar then prints another dollar, but you still have that same rock, it's going to be devalued. So you're going to need more. You're going to need more dollars to buy that rock, so that the price of that rock is going to increase because of the way that currency is managed, the way that currency is printed. So when a currency devalues, it can boost the value of equities for a number of reasons. Something that a lot of people don't think about is when a currency is devalued, it can make a country's exports cheaper and more competitive internationally. That can lead to higher sales and profits for export-driven companies, driving up their stock prices. So right here we can see GE as an example. We saw a mini depression in 2020 when COVID hit, but as we can see, GE has been soaring in price. The stock price has been soaring. And I think we can all agree that this has been happening in a lot of different equities. This has been happening for a lot of different companies, and a lot of people are trying to understand why. Well, when a company sells things abroad and they bring that back to this currency, which is devalued, what it can do is it can lead to higher sales and profits for those export-driven companies, which are going to drive up their stock prices. But companies that have a significant international revenue, they benefit when their foreign earnings are converted back into the weaker home currency. That conversion results in higher reported earnings, which can increase the attractiveness of their stocks. So as those currencies get converted back to the reserve currency, when your reserve currency is worth less, those sales that come back and are converted appear as if they are more admirable. So it increases the attractiveness of the stock, which I'm just pulling up GE as just one example, will drive the price of the stock higher. But now when we talk about real estate and cryptocurrencies, so let me pull up a Bitcoin chart here. Let me see if I can find a rather empty chart to pull up here. Let me just clear this off. So when we talk about real estate and cryptocurrencies, they also tend to rise in value during periods of currency devaluation, because investors, traders like you and like me, what they tend to do is to seek protection of their wealth from the eroding value of a currency by investing in assets that have the potential, notice I used the word potential, there's no guarantee in anything here, they have the potential for higher returns, or they're looking for investments that are going to hold intrinsic value, meaning that even though that currency may be devalued, the price of whatever asset or investment that they're going to be holding is at least going to keep that value as the currency is devalued. So when we're talking about inflation, right, we want whatever that we're investing into to maintain the pace of inflation and not lose any intrinsic value. So if you have $1 today and we have a 50% inflation, hopefully by the end of that cycle, you'll have $1.50 as part of your investment. You can, of course, translate that to whatever the rate of inflation is and just maintaining the pace of inflation, but ideally you're going to want to outpace that inflation. Just one example here, when we saw this crash after FTX hit the news back in late 2022, I was all for buying Bitcoin. I was getting very, very long down here, and I had a number of reasons why I was doing this. So just taking a step away from the currency devaluation for a moment, when you see major players getting liquidated and a lot of fear in the markets, generally speaking, those have been the best times to be buying. So I was looking at, indicators and, everything here on the daily time frame was saying like, hey, this is pointing to there being a significant bottom. While there were a lot of people that were talking about this guy just continuing to go lower and lower and lower, there were a lot of people talking about, Bitcoin prices going down below $10,000, all the way down to $5,000, $6,000. When you take a look at this, Bitcoin is a speculative asset. There's no doubt about that. But it's also an inflation-resistant asset in that it does have a limited supply, and it doesn't have the ability currently in its program to be printed. You can't create more than what the program is designed to print, or to mint, I guess I should say, not print. We're minting these. Every block has the reward, the block reward that miners get as part of that program. So with that, you only have X amount of Bitcoin that's available, and at some point, you're going to hit that cap, and by design, it was intended that transaction fees would be rewarding the miners for their effort to keep the network maintained. But down here we were talking about buying and getting long, and we made a decent amount of money on this rise, and I was an advocate for doing a daily cost average of Bitcoin, saying basically at the same time every single day, just buy Bitcoin, right? Just buy a little bit. If it's $5 a day, $10 a day. Just continue to buy Bitcoin, and if you would have done that, your average cost basis would still be like right around here, around $30,000. So you've basically doubled that money. And now we're sitting up here, and Bitcoin's not crashing, and a lot of people are trying to figure out why. Now, is Bitcoin going to continue going lower? It is very, very possible. But when we look at this from an Elliott wave perspective, and I always try and put like a number of different analysis on an asset whenever I'm looking at it, I'm looking at Bitcoin from a USD devaluation standpoint, meaning that Bitcoin's that speculative asset that will either maintain or exceed that intrinsic value holding, compared to, of course, that US dollar. But I'm also looking at it from like a wave perspective and a cycle perspective, and all I can see is that we've got signs that there is a corrective cycle here. We had an A, B, C here, and then we've got a corrective cycle right here, right, where we've got another A, B, C right here. So what does that then mean is going to be coming next? Well, I'm not saying that we're going to have like an immediate move up here, but what I can say is that there are many, many signs that would indicate that we've created a little bit of a bottom here. And yeah, we can still see a little bit of a pullback, but I would watch out, because once we break these highs right here, it's basically going to be a move up higher, watch for that retest, and then a move higher from there. This cycle appears to have a top around $100,000, but it is very, very possible that this will just continue to squeeze higher. Potentially going to 120 to 150,000, but again, we're just going to have to wait and see what happens there. So from a wave perspective, this looks like a completed correction, just like this looked like a completed correction. And from higher time frames, right, this looked like a completed correction as well, right? So we were talking about an ABC, right? This is a long correction. Other scholars were saying this is like a WXYXZ. That would be also a completed correction. One way or another, this looks like it did finish something. And now that that is done, we're talking about another uptrend to continue the trend. And if you look at this from a much higher perspective, I don't have a chart that goes out that far. Let me see if I can pull up the BLX chart, take a look at this on a weekly. I've got a lot of analysis on here, which I'm not going to get into a whole lot, but this asset, as far as a trend perspective goes, it's just been going up and up and up, and that will change at some point. But for now, that trend is still up. That trend is still intact. So from an inflation standpoint, Bitcoin has been that asset that has been holding that value. Now, moving back to, let me go back to the Bitcoin chart here. Moving back into the idea that we've got sort of an inflation scenario here, where we've got the dollar that is being devalued. Something that we really haven't seen is lowering interest rates. Now, there has been discussion about interest rates going lower, but lower interest rates tend to be a consequence of currency devaluation, but they also play a very critical role, because if you have lower interest rates, that means you've got lower borrowing costs, you've got margin costs that are lower, and this impacts both individuals and companies. And when you've got lower rates, you do have individuals and companies that are more inclined to invest in stocks and speculative assets, which are going to drive their price higher as well. So you've got sort of a network effect here. During devaluation, central banks may increase the money supply to stimulate the economy. Does that sound familiar? Yes, it should. It should, because back in 2020, when everybody was in quarantine and people didn't have jobs, everybody was really happy to take the handouts. Everybody was getting money from the government. They were getting money from the state. They were getting money from, X, Y, and Z. We had payroll protection. We had the stimulus. We had all of this money that was being just sent to U.S. citizens, and I know this was happening in other countries as well. But we had all of this to basically increasing the money supply to stimulate the economy. That additional liquidity can flow into the stock market, and I believe that it did, and I believe it also flowed into other assets as well. There was somebody famously on Twitter that was basically saying like, hey, that stimulus check that you got back in 2020, that is worth X amount of dollars now. And this is a perfect example, because anybody that saw the government printing all of that money and handing it out, they should have seen that there was going to be serious negative effects of that money printing, and eventually it's going to get to a point where you had all of this inflation as a result of that. It should be no surprise. Yes, everybody's going to complain about it, but it shouldn't be a shock to anybody that the prices of all of these assets are going up, because when you add 20% on top of the money supply just out of thin air, well, that's going to have an impact on the cost of goods. It's going to have an impact on just the cost of doing business. The other thing that we saw was people were getting paid outrageous amounts of money. Companies were hiring left and right, but then we've already seen the mass layoffs happen. But you have all of this money that was being printed, and that's going to cause the cost of goods to go up. And I've said this before, and I'm going to say it again. When you have less money in, let me reverse that. Sorry, I'm just kind of just saying this off the cuff here. When you have more money, rather, being injected into the market, your stocks are not going to be worth less. They're going to be worth more, because the dollar ends up being worthless. And I don't mean worth less. I really mean worthless, because by printing all of that money and handing it to all of our citizens, we are creating a scenario where our dollar is becoming worthless. It is being worth less. It is worth less, but it's becoming worthless because other countries are trying to capitalize off of this, and I believe China is going to be the country to do this over the next 10 to 20 years. This is not going to be an instant thing. But I believe that the stock market, I believe that real estate, I believe that speculative assets like gold, cryptocurrencies, they're all going to continue to move higher. And until we start to see them cutting interest rates to the point where it is getting very similar to where we saw rates, even 4 years ago, 5 years ago, back in 2021, 2020, 2019, back when rates were still low. Once we start seeing interest rates go back to those levels, then we can start talking about there being a more catastrophic event coming. But for right now, I believe that interest rates, they may fluctuate, they may have some ebbs and flows, but I don't think they're done going up yet. But we're really not going to see a liquidity crisis flowing. I don't think we're going to start seeing that until they start to cut interest rates and going back to, kind of back to where they were. I believe interest rates were darn near zero there for a while. Once they start cutting interest rates, that's when something is going wrong, because instead of them printing money and flowing that into the economy, they're going to start cutting interest rates in order to make borrowing money more available to citizens and companies. Once that starts happening, after we've already gone through a cycle of money printing, that's when we can start talking about a serious crisis coming, and that's potentially when we can start to see there being maybe another significantly depressive cycle. I did a video several years ago talking about there being the potential we could be seeing 55 years of pain, and potentially that has not started yet, right? Because the S&P 500 is trading at all-time highs. But yet there's still several companies that are beaten up right now. There were several companies that are really, really beaten up, that were doing really, really well over the last several years. But keep an eye for that. We'll watch for interest rate cuts, because we've already had the injection of money going into our banks, into our bank accounts and whatnot. And maybe that's going to happen again. Maybe there's going to be another stimulus. There's no guarantee that that's not going to happen. It might actually happen. We are already seeing some signs of stimulus of some kind, which is in the form of, canceling debts. That's another form of stimulus, because, fact of the matter is, you can't just cancel debt. Somebody's got to pay for that somehow. And if hospitals have to pay for that, healthcare costs are going to go up, because somebody's got to pay for that, right? If you've got all of these debts that are being canceled, it's got to be paid for somehow. So if you're going to cancel a bunch of medical debt for people, this is just an example, hospitals and just medical costs in general are going to rise, which is going to devalue your currency because your buying power at the medical facilities is being diminished. If you're going to be canceling student debt, right? And I'm not going to talk about, whether, student debt was canceled for these people or that people or, all of this and that. But if you're going to, just as an example, start canceling student debt, you're going to be forgiving those debts. Somebody's got to pay for that. Well, now we're talking about the potential for university costs going up. Now your buying power at universities is being diminished. Your dollar is being devalued because of all of this stimulus that is happening. It's not a good thing. If you're going to go to college, you need to sign up for something that is going to be useful for you, that you're going to be able to make a living off of. But you need to think about that kind of thing because I see a lot of people that go to college for useless things. And more power to you. If you can make a living off of it, that's great. Personally, I don't believe that college is that important, more than skills are important, but, more power to you. But those are just some examples of how currency devaluation can impact you even on a short term. We're talking about canceling debts. We're talking about, canceling, medical debts. Those are all going to have an impact on your currency, and because it's going to cause prices to go up. If a hospital has $1 billion in accounts receivable and that's immediately just canceled, that $1 billion has to be made up for somewhere. And it's going to likely be in the form of increased medical costs, which we already know that medical costs are very high as it is. Okay, I'm just going to go ahead and finish here. I've been going for about 20 minutes on this, and that's about 15 minutes longer than I really wanted to. But just real quick summary. Currency devaluation likely will lead to a rise in equities and speculative assets due to a number of things. Increased export competitiveness, higher reported earnings due to foreign currencies being converted back to your reserve currency, which is going to appear as if they have better than expected earnings. Also, a shift towards wealth preserving investments like real estate and precious metals and cryptocurrencies, whatever that might be. Lower interest rates, which have not come yet. Increased money supply, which is absolutely here. But you need to understand all of these dynamics to make informed decisions for all of these changing economic environments. There are some really great videos out there, and if you're on the Discord, I'm more than happy to share those with you. Ray Dalio has a really great book that talks about changing world orders, and he has all but predicted a lot of things that are going to be happening here over the next 10 to 20 years, and I do agree, completely with things that are happening. A lot of people aren't going to agree because they haven't experienced it, or they are not willing to look at the past to to realize that we always make the same mistakes that we made in the past. If you didn't experience it, you're not going to remember what it was like because you weren't there. But if you look back in the early 1900s, going into the Great Depression, there's a lot of things that are happening today that were happening back then, but a lot of people can't make that correlation because they didn't experience it. I'm not going to get into that a whole lot, but just thinking about all of those things really makes you wonder, how close we are to a significant economic event happening. We're printing money like it's going out of style. Our debt is continuing to increase significantly, and it shows no sign of stopping. We don't have any politicians that are willing to talk about our debt crisis seriously, and all of this is devaluing our currency. And other countries are in much better positions than we are, and I believe China's going to be the one that's going to be taking over. All right, guys, that's all I've got for right now. All in all to say, yes, I think S&P 500 is going higher. Yes, I think Bitcoin is going to go higher. Yes, there are going to be waves. There's going to be corrections. There's going to be this, that, and the other. But I think generally speaking, I think these assets are going to continue to rise, potentially over the next 6 years, but we'll have to just kind of wait and see. I was talking about the S&P 500 going to 5,600, surprise. And I was talking about, once we pass 5,600, we could be potentially going even higher than that. And surprise, we're likely going to be going higher. NASDAQ's going to be going higher. We have an AI bubble. There's a lot of things going on that are indicating that the markets are not stopping anytime soon. So be very, very careful when we're talking about short selling assets, especially these assets that tend to be inflation resistant. All right, that's all I've got. If this video helped you in any way, shape, or form, you know the deal. Like, subscribe, share. I am working on creating videos less frequently, and to be higher quality but less quantity. So hopefully this video was helpful and informative in some way. And of course, last but not least, wherever you are in the world, have a good day, a good night, and a great evening. Take care, everyone.